guys, here today we're gonna talk about 7 high growth stocks that are gonna be beasts in future years, in my opinion, okay? All 7 of these high growth stocks I'm gonna share with you here today are expected to grow by at least 10% plus next year. And some of these are expected to grow between 20% and all the way over 100% next year. Yes, you heard me right. One of these stocks is actually expected to grow over 100% next year, okay? All 7 stocks are almost impossible, in my opinion, to lose money in over the next 5 years. Obviously, in the stock market, everything's possible. Not every investment you ever make in the stock market will always work out. But when I look at these 7 high growth stocks and the valuations they're at currently, never mind if these stocks continue to drop a little more, it's almost impossible for me to not imagine these stocks, basically going up quite considerably over the next 5 years. Never mind, the chances you actually lose money in these stocks over the next 5 years, okay? All 7 stocks have the possibility to increase by at least 50% to 250% plus in the next 5 years, in my personal opinion, looking at the valuations of these companies versus where their growth rates are at. And in this video, it's not just about me telling you about these 7 stocks. It's about me going in depth on them and explaining why I'm so excited about these stocks. Why are they so special as high growth stocks, okay? These aren't we're not talking about Coca-Cola and Pepsi in this video, okay? We're not talking about Johnson & Johnson and Procter & Gamble in this video, okay? These are high growth stocks we're talking about here today, okay? Now, before we get into this, do not just buy these stocks because of this video, okay? Every time I ever make one of these videos about high growth stocks or stocks I'm super excited about, a ton of people go out there and they just start, flooding money out there and they're like, oh, well, Jeremy's buying, I gotta buy it. Do not just buy stocks because of this video, okay? Know what you are doing in the market. Be confident that you are making the right decision because you know what you're doing. That's not a sustainable long-term strategy just to buy based upon the stocks I talk about in a particular video, okay? I live in Las Vegas, as many of you might know, okay? This is a city built on what? Gaming, okay? People, gambling their money around and losing at the house, okay? And, if you're just buying stocks because you read an article, you watch a video, you're just gambling in the end, okay? Let's call it what it is. You're not using your own strategy and your research and things like that, okay? Now, if you need help knowing what the heck to do in the stock market, like what to look for in stocks, how to run a portfolio, all those sorts of things, we have that opportunity for you, okay? Fill out the application, first link in the description down there if you want the opportunity to learn directly from me on how to make more money in the stock market while taking less risk, going super in depth. And even if you're somebody that's looking for one-on-one help, we even offer that now with coaching from people that are confirmed multimillionaires in the stock market that have learned directly under me. We offer that as well now. So first link in the description down there, okay? I hope you guys enjoy this as always. Smash a thumbs up. Thank you, thumbs up squad. I appreciate you guys as always. Let's get rolling, okay? Stock number 1 of 7 up here is Slack Technologies. Ticker symbol on this is work. Put in the work, okay? It's a $25 stock. And my goodness, so Slack is now on my front page of my iPad, my phone, everything. Slack's something I didn't even know about a year ago. And now this is actually a service that is pretty integral with our actual business. I use it every single day to communicate with many different people. We have a coaches chat now, so all the 7-figure coaches and I can easily communicate with each other, share documents back and forth, talk about different things rather than through emails and text messages and all that kind of more old school things. And if you got, several people inside a company, you don't really want everybody texting you all the time and those sorts of things, as well as any administration, any people that do back-end work for us, independent contractors, all those sorts of things. We can easily communicate all in Slack, and it's went from something that literally I didn't even know about this a year ago, and now it's integral with my actual company. So super, super important. And imagine how many businesses that over the past few years have found out about Slack, and now this is key to their businesses, okay? Slack just reported revenue growth of 50% for the 3rd quarter in a row a few days ago, okay? 50% plus for a 3rd quarter in a row. That's amazing, okay? Now, the interesting thing was the other headline was the company has not seen a change in its win rate against Microsoft, okay? It also hasn't seen an increase in its loss rate either. There's 2 different ways of looking at it, right? Okay? So earnings, they basically broke even on a non-GAAP basis when it came to earnings. Revenue beat. They came in with $215 million of revenue versus $209 million were expected by analysts. And the company reported a GAAP net loss of $73 million, but that's versus $360 million the previous year. So there's a mass increase in the business getting closer and closer to profitability, okay? And in 2021, I actually believe there's a decent probability that Slack work, okay, will end up actually making a slight profit on the bottom line. And this is that type of opportunity, you can get really excited about in a stock. And this is where we can see stock prices increase dramatically and the way investors look at a business model increase dramatically, right? When you go from a business that historically has been losing a ton of money, right, to all of a sudden you break even or start making money on that bottom line, that's when time after time after time again, we see some of these stocks all of a sudden increase 100%, 200%, 300% in terms of their stock price, because all of a sudden a massive amount of investors are all of a sudden like, wait, wasn't that company losing, a 300 million a quarter a while back? And oh, now they're profitable? It's a whole different way of looking at things, especially if the company's expected to continue to grow in the future. And this company absolutely is, okay? Next year, analysts have this company growing about 28% revenue. I think that number's low, and I think that number's really low, okay? I think this company has 30% plus revenue growth, going for years and years and years and years into the future. I don't think, they're at 50% now. Even if that slows down, what's it going to slow down to? Maybe 45%, then 40%, then maybe, 37%, 35%. There's going to likely be many, many years of future phenomenal growth for Slack in general, okay? Now, yesterday in the breadcrumbs tab, I actually posted a little kind of interview clip from Kamoth from a few years ago, okay? Very intelligent guy in the VC land, been invested in and around so many successful companies. A guy really knows what's gonna be huge and what's likely not gonna be huge, okay? And in that video, he goes on to say that Slack will become one of the most important companies in the world in the future, okay? And especially in the enterprise space, I think that's rather important, okay? I think that's really, really important, and that's really, really big that somebody like Kamoth would say something like that. And by the way, when he said that, that was like a year or two ago. So, for him to have that type of confidence, right? Kamoth having, being confident like that, it makes me say, there might be something pretty big here, right? And especially when you're talking about a company that has under $15 billion market cap. Somebody like Kamoth, super intelligent, knows this space so well. And he says this is going to be one of the most important companies in the world moving forward, and it's at a under $15 billion market cap. It's probably got some room for the upside, right? Maybe just a little bit, right? Now, if you think about the space they're in, okay, company communications, there's one main competitor to them, and that's it, okay? One big dog competitor. It's like them versus them, okay? That's Microsoft Teams, okay? Microsoft Teams and Slack. They're going to make up the high majority of basically this space moving forward, okay? 80-90% market share is what the companies will have combined. Now, who wins in this space? We're going to have to see who wins long term. But I can tell you, imagine in the future when every single small business, mid-sized business, and enterprise, like large business, right, is on one of those two platforms and uses these, like every day, and it's like integral to their business, right? Which is where we're going over the next 5-10 years. Regardless, there's going to be a huge market opportunity for both companies in this space. Obviously, this is what Slack mostly focuses, 100% focuses on, right? Microsoft Teams, it's like, Microsoft is one of Microsoft focuses, right? Slack just focuses on this and building out this product. So, who wins there? We'll have to see over the next 5-10 years. But regardless, I can tell you, it's not going to be like, Slack's going to get all the market share or Microsoft's going to get all the market share. They're going to divide them up between the two. Some companies will use Microsoft Teams, it'll be better for them, and some companies will use Slack and it'll be better for them. For us, Slack makes more sense. It depends on the business and the business model and all the sorts of things, okay? Now, when it comes to balance sheet around this company, phenomenal $1.5 billion plus in cash and cash equivalents. And remember, this isn't like a massive company, right? It was less than a $15 billion market cap. To have $1.5 billion in cash sitting around, that's pretty darn attractive. That's like over 10% of your market cap just sitting around in cash, right? They do have $630 million of long-term debt at a very low interest rate. They could pay off that debt tomorrow and still have $900 million in cash sitting around, cash and basically short-term investments. So they're in a very, nice financial position. Let's just put it that way. Now, 2020 through 2030, this is going to be a growth beast decade for Slack, okay? Now, obviously the growth number percentage will slow as the years tick on, but when you talk about how big these numbers will start getting, especially as we go up on 2022, 2023, 2024, 2025, and they still continue to grow the business at, let's say, a 10% plus clip, the numbers are going to start getting really, really large for Slack as we go, throughout this decade, and especially as we'll start to move through the end of the decade. It's a company that'll just keep innovating, coming out with products and services that are phenomenal. They got that at their core, that's in their DNA, and so it's going to be an exciting stock, needless to say, and I think it has a lot of upside over the next 5-10 years, it looks like, okay? Let's get into stock number 2 of 7. It is Dropbox, a cloud provider, ticker symbol DBX on this one. This stock is under $20 right now. This stock I really, really like, okay, for many different reasons. Dropbox, there's a market capitalization on this company of $8.1 billion, okay? $8.1 billion. You're getting one of the biggest cloud companies in the world, right? Trailing P looks like super expensive, right? 246. And so at first it looks like, man, this is really an expensive stock, right? Until you back out and look at the forward P of 22 on this company, okay? That is ridiculously low. I can't even explain how, unfathomably low that forward P is for a company like Dropbox that has a type of growth going forward for this company for the next 5-10 years. Absolutely unbelievably low, way too low, okay? Dropbox should grow next year double-digit percentage, okay? 10% plus. I wouldn't be surprised if this company ends up growing revenues between 12% and 14% in the future year, and they should continue to grow for years and years and years into the future as a cloud company, okay? And you add on top of that what they're trying to do in smart workspace, right? And with obviously HelloSign and HelloWorks and things like that, a company they bought very recently. I've been using Dropbox for 5 years strong now, okay, for my businesses. My real estate marketing business, that was the first business I ever started to use Dropbox for. And ever since then, it's my main cloud company that I use, okay? And I have no plans to change. I basically used this product for, I just started buying Dropbox stock, in the past month or two. And I can tell you, I've been loyal to that company forever in terms of actually using the product and enjoying the product and service. And I have no plans to switch to any other cloud company out there, okay? It's like, why would I? Like, why do I want to switch from Dropbox to one of these other ones? It doesn't make sense. It's so easy to use. Like, I'm used to using it. All my data's there. Like, I'm not moving from Dropbox, okay? 5 years going strong. And Dropbox, I think, is in a real nice position in terms of the way they're running their business. They're doing an open ecosystem. A lot of these, enterprise companies, they like to try to close up the ecosystem and they want to be everything for everybody. Whereas Dropbox says, we're going to work well with everybody. And you think about what's going on when it comes to like government looking in on these big companies and whatnot and being like, do you play well with others, or are you just trying to get monopoly type market shares, right? And when we think about some companies like Microsoft, right? Don't be surprised if government starts, coming after them if they feel like, Microsoft's getting any type of monopoly market share or making it unfair for other companies to compete in this space. Whereas a company like Dropbox obviously has an open ecosystem. And by the way, Slack as well, they have a super open ecosystem, okay? Now, when it comes to Dropbox, this company has years and years and years of growth ahead of them, okay? The company has 600 million plus registered users, 600 million plus, okay? 350 million of those are potential high value targets. Company only has 15 million, a little over 15 million paying users as of right now. Needless to say, this company will continue to grow for a long time into the future. And never mind if they go up on their plans. Like if Dropbox all of a sudden decides to go up on their plan for me $10 or $20 or $30 next year, I'm not dropping out of Dropbox and going to somebody else. Maybe if they double their price, maybe that would be a different situation. But I can tell you, if they went up on me for price, I'm not, like, it's too much work, it's too much hassle. Go switch over to another cloud company all for $10, $20, $30. So they have pricing power long-term in this space. Long-term targets for Dropbox, $1 billion in annual free cash flow compared to $392 million on a non-GAAP basis as of right now. I mean, imagine if this company gets to that type of level over the next 5 years, which is very much a possibility. $1.1 billion sitting around in cash and short-term investments. Remember, Dropbox, right? It was what, an $8 billion market cap? And they got 1.1 billion sitting around in cash and short-term investments. That's incredible. And no long-term debt on this company at all. which is absolutely amazing. All they have is capital lease liabilities, and that's it, okay? So that is an absolutely amazing balance sheet. One of the best I own, okay? Dropbox, once again, $8 billion valuation as far as the market cap right now. The valuation over the next 5 years is going to be up and away, in my opinion, and in a massive way, okay? That covers Dropbox. So far we've done Dropbox, we've done Slack. Next one up here, you know what? You guys like to make easy money. Be honest. Do you like to make easy money? Because this stock is, yeah, it's pretty easy money, okay? Facebook is stock number 3 of 7. I've been calling this stock easy money since it was $100-something a share, okay? And guess what? I'm going to be calling this stock easy money all the way until it's $400+ a share. And here today in the 200s, it's still dang easy money, okay? I mean, I'm up $42,000+ on this position in the public count, right, on my 371 shares. And I can tell you, let's just, let's say we got a little scenario here. Let's say I was forced to either sell my 371 shares of the FB in the public count, or I was forced to buy another 371 shares. And I'm forced to do one of those two. I got to do one of the two. I'm buying another 371 shares of the FB way before I'm selling 371 shares of the FB. I'm telling you that much, okay? The FB is silly value, okay? It's a 25 forward P on this company. We're talking about one of the safest business models in the entire world, in my personal opinion. I mean, just year after year, what do? They keep their users. The user numbers grow daily, monthly. It doesn't matter, okay? People continue to use FB. People continue to use IG. People continue to use WhatsApp. It is what it is. It's one of the safest business models in the world at a 25 forward P with amazing growth. Next year, this company should grow revenues at 24% plus, okay? Amazing growth. And this company will continue to grow for years to go in the future. And I'm talking about high level growth, like 10% plus revenue for as far as the eye can see. They have a top 5 best balance sheet of any public company in the entire world, okay? When I always think about the 2 best balance sheets in the world, I always think about Apple, I always think about Google, okay? And then after that, it's up for grabs. You obviously have Microsoft, you have FB, and you have Amazon, okay? And it's a top 5 balance sheet in the entire world. The amount of ads that are basically shown on their different platforms and services, right? FB, IG, WhatsApp, anything across the board, and any new, products or services that come out in the future, the amount of ads shown will continue to go up. As an advertiser, the amount you have to pay per ad is going to what? It's going to continue to go up. And guess what? The FB's other revenue streams is also going to continue to go up and away, okay? And so, I mean, this is literally the simplest one of these 7, okay? It's still easy money for the next 5 years. It's about as easy as it gets in my personal opinion. The chances, if I'm buying FB here today, the chance I lose money in the next 5 years is almost impossible for me to fathom, 5 years from now, this stock being down from where it's at today. And the chances I make a considerable amount of money in the stock over the next 5 years, very high. Remember, FB could be the biggest company in the world market cap wise in 5 years. I've said it. I believe it. I think it's going to happen. Time will tell, okay? Stock number 4 of 7 up here of the high growth stocks is a company named Upwork, ticker symbol UPWK. It's a $15 stock here, so, fairly cheap. This stock hasn't done anything since its IPO. This one went IPO like 2 years ago, right? It was $20+ stock. Here today, a couple years later, it's $15 a share, sitting at a $1.8 billion market cap. Stock has done nothing, absolutely nothing, okay? You ever know Jeff Bezos has an amazing, saying? He says, your margin is my opportunity. When it comes to, growing Amazon, your margin, your profit you're making, it's my opportunity, okay? And I have a similar saying, except mine is, your IPO that Wall Street didn't get is my opportunity, okay? This is why I never buy into IPOs. They're usually overvalued and they usually don't work out. But sometimes Wall Street frankly, they just don't get it. They just don't understand, and they'll hammer a stock or the stock won't go anywhere for a while, and Wall Street just doesn't get it, and it just doesn't make sense. Investors just don't get it. That happened with the company we just spoke about, the FB, right? FB, after they went public, the stock price went down 50%, okay? 50%. Can you imagine that? It went down to $19 a share. We're talking about a company that was on trajectory to be one of the biggest companies in the world. And Wall Street was like, I just don't get it. Like, what if they're the next MySpace? Like, how are they going to make money? I just don't get it. And they just never, they just didn't get it, man. Our stock sold off over 50% after that IPO, from like $38 a share when it went public that day to $19. I think it bottomed around 18. They were like, I just don't get it, man. And yeah, needless to say, the FB went on to becoming one of the biggest companies in the world, and it's on its way to becoming possibly the biggest, okay? Ridiculous. That's Wall Street for you. They just don't get it. Investors, sometimes they just don't get it. And when it comes to Upwork, I just don't think they're getting it right now, okay? Upwork should, continue to grow double digits plus for years and years and years to go in the future. As of right now, Wall Street has them growing about, as far as analysts have them growing about 15% revenues next year. The freelancing economy is about to go crazy from 2020 through 2030, okay? I mean, the freelancing economy, I feel like, really woke up in a real way over the past decade, right? 2010 through 2020. I think it became a lot bigger. A lot of these products and services like an Upwork really got expanded and, started to get popular. And, over this next decade, it's going to become way bigger. Like, freelancing economy is going to become way bigger than we have ever seen in modern history, in my personal opinion, okay? I think, a lot of workers are basically going to be offering freelance work of some kind, whether it's as their full-time job or their full-time business, or just as like a part-time way to make money on the side from their, maybe they have a main job, but they want to make some money on the side. So maybe they have a special skill of something. They can sign up on Upwork, and guess what? They can go ahead and, do some work on that as well, okay? Upwork might be the company that is best set to take advantage of the freelancing economy, the freelance workforce, okay? I can't really think of a better company that is better suited to, thrive in this space if we're talking about freelance work. Obviously, there are different competitors in this space. I think the biggest competitor in this space long-term will probably be Fiverr. I think it's going to be between Fiverr and Upwork. But like we talked about with the whole Microsoft Teams and the whole Slack situation, right? Not everybody's just going to, go to Fiverr. Not everybody's just going to go to Upwork. There's going to be plenty of market share out there for these two companies. And that's the type of opportunities I like to think about if I'm going after a high growth stock. I want massive TAM opportunities. And if we're talking about freelance economy, I mean, this is something that's just going to go crazy over the next decade, in my personal opinion, okay? The market capitalization for this company is $1.8 billion. How much of a joke is that, okay? $1.8 billion, this is one of the biggest opportunities when it comes to freelance economy, a trend that's going to take off over the next 10 years at $1.8 billion. It's just ridiculous, okay? So Upwork, in my opinion, can I see this company being a $5 billion plus market cap in 5 years? Absolutely, okay? Absolutely. I mean, you got to be flipping my flapjacks for me to see that company at a $1.8 billion valuation. I mean, it's just Wall Street investors are asleep on this one. They're asleep at the wheel. And yeah, they're not going to be asleep for much longer. Wait to see what happens with that stock over the next 5+ years. It should be pretty exciting, and it's yeah, I think it'll definitely be probably as far as a $5 billion plus company in the next 5 years. Okay. Speaking about all these fives, what is stock number 5 of 7 we have up here? Okay. It is a company named Box, ticker symbol Box, okay? The stock is not to be confused with Dropbox. This is also a cloud company. They focus a little more on enterprise, whereas Dropbox focuses a little bit more on small businesses and mid-sized businesses. Box likes to focus a little more on the enterprise and the bigger companies, okay? $18 stock as of right now. Once again, it's a cloud company. Don't confuse it with Dropbox, okay? It's kind of confusing that one's named Dropbox, one's named Box, and they're both in the cloud space, okay? Small market cap on this one. Under $3 billion for this particular company. Forward P on this company of under 40, okay? Pretty darn intriguing for a cloud company. It's just funny. The cloud was like all the hype. 5+ years ago, cloud was all the hype, and everybody was, as far as VC funds were piling into this, these companies went public, and, now no one wants a piece of cloud, and it's like, these companies are finally going to start getting the real profitability. Like, these were huge money losers for the longest time. I think the real opportunity was if you were early stage on these companies or you're getting in these type of companies now. When it comes to like Dropbox, Box, and those sorts of things, you either had to be super early days or, you got to be late stage when these companies are starting to get to profitability over these next few years and major profitability. If you're caught anywhere in the between, you kind of got stuck in like a stagnation period. And that's just what's happened with Box and with Dropbox particularly, okay? Companies should grow 10% plus revenues next year. The companies, analysts have them grow 9.9%. I think they'll easily grow 10% plus next year. $271 million on the balance sheet when it comes to cash and cash equivalents and short-term investments. And, it's just a really good balance sheet, especially for a company this size. So let me be very clear. I like Dropbox better, okay? I like Dropbox as a better play. I feel safer in Dropbox. I feel like the chance I lose money in that stock over the next 5 years, almost non-existent. I think the chance I get really high gains in that stock over the next 5 years, super, super high. And then Box, I feel like, there's really good opportunity there. I just like Dropbox a little better, but I had to include Box in this list because it's just like, I think they're gonna see their stock price appreciate quite a bit over the next 5 years as well. So for me to leave them out, I just can't do it. And also, when it comes to Box, keep this in mind. I think it's actually going to be a buyout candidate, okay? If this stock doesn't get moving in a major way over the next 6 to 12 months, I think personally this will be a perfect buyout candidate to a bigger tech company out there. Maybe Dropbox buys them out. That could be a possibility and kind of grow into more of a cloud giant to compete even on a higher level, right? I think there's a lot of different companies out there that would love to add Box at it's a $3 billion market cap roughly, right? So what do you have to pay? Maybe you pay a $4 or $5 billion valuation for this company. For a lot of these big tech companies, it's nothing to pull something like that off. They could easily get the financing for that. Or if we're talking about the big dogs, dude, they could pay cash for that tomorrow if they want. It's nothing to them, okay? And so I think Box, watch out. It could be a buyout candidate as well. Alrighty guys, it is time to get pumped. It is time to get excited because stock number 6 of 7 up here, the P13 squad up. It is time to get rolling. Let me give you a little hint about this one, okay? Gordon Gekko said, if you're not inside, you're outside. And if you don't know what we're talking about when we talk about P13, then you're on the outside, okay? Planet 13 Holdings, ticker symbol PLNHF. This is the highest growth company I will talk about on this list, okay? It's a $3 and some change stock here today. I don't read very many good messages ever on Yahoo message boards, okay? Most of them are like, my intelligence level goes down a little bit when I go on Yahoo message boards, but I can tell you, I actually saw a great one yesterday, okay? One of these gentlemen, he says, Planet 13 is equivalent to an early venture capital style investment. It's exactly how I view this one. It's like getting in early as a VC fund, except, obviously average Joe's like, we can't just get in on that, right? But you look at something like this, because of basically being in the MJ space, they can't get as much traditional financing and funding that they would be in other situations. So all of a sudden, on the OTC exchange, we're kind of like those people that are funding it to a certain extent. And that's why this is such an interesting opportunity in the stock. They have a store business model that works on a very high level, okay? When it comes to their Planet 13, obviously their location they have in Vegas. I can tell you, Vegas traffic is down massively, okay? It's not like Vegas is packed. I can just guarantee that. The convention business is 100% gone. The travel business, as far as like people taking leisure trips to Vegas, is down considerably. And yet the P13 store, go there on a Friday night, Saturday night, crazy busy, okay? Any night it's very, very busy, but never mind on the weekends, absolutely packed, okay? Their business model works. It's like Cabela's back in the day, which was one of my most successful investments ever. Cabela's, okay? Cabela's was like this, basically had these massive stores. Stock went from $5 to like $70 plus from basically, I think it was around like 2009, 2010 through about 2014, 2015. And their stores were massive. They sold fishing equipment. They sold, all types of things, hunting related items and, obviously clothing, all those sorts of things. But their stores were awesome experiences. And that's why they were able to do such volumes, because people wanted to go to Cabela's. It wasn't like, oh, I got to go to Cabela's to get something. It was like, I want to go to Cabela's. I don't want to spend a bunch of money at Cabela's because it's a fun place to go. And when you look at Planet 13, they offer that exact same experience, but it's in the MJ space, okay? And so this business model will work across the United States long term, and they will be able to open up these type of stores in every major city in the United States over time, as long as they can legally do it, okay? Their products, they sell their own branded products, are selling very, very well, okay? There's a considerable amount of revenue they're getting in their stores from their own products. Those sell very well. The branding on those is phenomenal, okay? And so it's just a matter of time as this company, will expand across the United States over the next 5-10 years. If you live in a major city, Planet 13 is going to be coming to your city over the next 5-10 years, in my opinion. I mean, we're talking about it's going to expand everywhere, okay? Maybe even, some stores in some of the big cities in Canada, and maybe even internationally long term. But I can tell you short term, as far as, short term being the next 5-10 years, Planet 13 is coming to your city if you live in a major city. And, this is interesting because a lot of people say, oh, it's so overvalued. It's at a $400 million plus valuation. It's so overvalued. And it's like, if you got a really short-term perspective and you're only judging the business off what they're doing today, I can understand that argument. But do you understand the type of opportunity this company has in front of them over the next 5-10 plus years? It's so crazy, okay? I mean, think about this. They have one store in Vegas right now, right? The Medicine store, the other store they have in Vegas that they just got the license back for, will probably open within the next quarter or two, right? Then you have the massive Santa Ana location opening in 2021, hopefully in the front half of 2021, right? The Santa Ana location, 10 minutes away from basically Disneyland. Huge opportunity, okay? Never mind, they'll be able to actually start selling their branded products across California once basically they start in California. Imagine that, right? And imagine this company's going to probably build 1 to 2 stores a year, almost every year, for years and years to go in the future. They'll probably do between $40 million and $100 million per store they build revenue, right? Depending on the city, obviously, right? On, much less of an investment than that. Let's just put it that way. Never mind, they expand their brands, their own brands, across all these different cities and in states as they continue to build. Never mind if we tack on federal legalization coming, hopefully at some point within the next few years. Let's put it that way. Like, who knows when things will get passed, but I can almost guarantee you federal legalization is coming. Why is it coming? Well, one, the people want it, okay? But two, and more importantly, states, federal government, they need more tax revenue, okay? And how do you get more tax revenue? Let MJ Space expand and watch, the type of revenues that will start coming in for, basically cities, states, and the federal government across the board, okay? And so ultimately, in 5 years, could this be a $2 billion, $3 billion market cap company? I think easily this could be a $2 or $3 billion company when I look at how many stores they'll likely be able to expand into over the next 5 years, how many cities they'll be able to expand into, the products. I mean, we're just talking about, we're talking about massive potential in this one. 101% revenue growth. Analysts are expecting this company to grow next year. I think that number's low, guys, okay? I think that number's actually really low. I think they're going to destroy that number. Think about that. Analysts expect this company to grow revenues 100% plus, and I'm here telling you that I think that number's low. That kind of gives you a little bit of context on how much upside this stock potentially has as far as revenue growth going for years and years and years into the future. And so P13, in my opinion, is a huge winner the next 5+ years, okay? No doubt about it. Stock number 7 of 7, pretty simple one, okay? Let me give you some hints. Let me start out by showing you this picture here, okay? You see that? What is that, okay? Let me show you another picture, what is that, okay? It's cake, right? Okay, maybe you're still not getting it, okay? What if I show you a piece of cheesecake? Now, do you know what stock I'm talking about? I'm showing you a piece of cheesecake there, okay? No, you still don't get it, okay? All right, let me show you a picture of a factory. Now it is starting to hit, okay? Factory. Yeah, let's go back. Cheesecake, okay, let's go to the next slide. Factory. Let's go back. Cheesecake Factory. Yes, the Cheesecake Factory. Ticker symbol cake on this one is stock number 7 of 7. This is a stock that is $20-something a share, like $29 a share here today. It's a stock I've already made a lot of money on in a very short amount of time, right? Public count, I already made like $6,800 on this stock. Then in my main private account, I'm up over $12,000+ on this particular stock in that account, okay? This is a company that will grow quite nicely over the next few years, in my personal opinion. I'm not selling out of this stock anytime soon. If anything, I'm probably more interested in buying rather than selling. A 31+% revenue growth expected next year, okay? 31% plus. Also, this business model is going to go from taking a massive loss to all of a sudden having very nice profitability, assuming like we don't close down the entire economy again or something like that, right? So it was put in a horrible situation. Restaurants, anything in this space was put in a horrible position. All of a sudden, the whole economy has to close. We have to close our restaurant. All of a sudden, you take massive losses. And, as things continue to open back up, and hopefully, the Rona numbers won't go crazy next year or something like that. Hopefully, that will stay down. This company should be very, very profitable. And when I look at this business model, like this is going to be a $40+ stock again. It will be. And there's no doubt in my mind that this will be a $40+ stock again in the future, okay? There are multi-years of 10% plus growth ahead for this company, in my opinion. Comp restaurant sales, which essentially is like, basically if you think about a restaurant that's been open for at least a year, like how much do they grow sales? I think they'll continue to grow sales for years and years to go in the future. When it comes to Cheesecake Factory, they're going to have more and more restaurant openings. North Italy, I think, is going to take off over the next 5 to 10 years. I think they're going to open a lot of locations. I think that's going to be highly, highly successful. And so overall, like Cheesecake Factory, I love that one on a valuation basis and the type of growth that company will provide over the next several years. Oh my goodness, guys, this has been a beast of a video to put together. I hope you guys enjoyed it. And, smash a thumbs up if you don't mind. That helps the YouTube channel out in a massive way. If you know anybody that is into stocks, maybe share this video out with them, get their opinion on these stocks, and make sure you research all of these, okay? If you want the opportunity to learn directly from me on how to make more money in the stock market while taking less risk, fill out the application below. Also, if you're looking for one-on-one coaching, I actually have millionaire students in there now that actually do coaching for us. So if you like to learn more on like a one-on-one basis with somebody that's, achieved everything you're ever trying to achieve, we have that opportunity for you as well. First link in the description to apply. Thank you for watching and have a great day.